Hi trader, this is Mario from Forex Other Way, the channel for traders run by a trader. If you're trying to break even or your account doesn't want to grow, or even worse, the amount of money on your account is getting smaller and smaller, you start to take weird decisions, start overtrading, which at the end of the day make the situation even worse. As a result, your account is diminishing and you are just thinking what to do, taking wrong decisions, opening wrong positions, and at the end of the day, the account is gone. In this video, I'll show you a solution for this problem, my friend. I'll show you a trading system which will allow you to get onto the surface from under the water or to grow your trading account in steady steps. So let's start the rock and roll. So if you are in such a situation, first thing you should know is that you cannot overtrade. You are not allowed to overtrade in situation when you lost a couple of positions and your account is diminishing. The less is the better. The less you trade, the better results you can obtain. The second thing is you must think dissociatively, not associatively. Funny words, isn't it? What's the difference? What does it mean? Associative thinking is a kind of emotional identification with your position in the market. So you're attached to it. You care about the position, or, you're emotionally involved, bound to your position. And in case of failure, you treat it as a personal failure. You take it very personally. You say, oh gosh, I lost. Oh my God, you cannot sleep, whatever. You cannot think about other things. How can it be I was defeated? That's the associative thinking. You should avoid it. From the other hand, dissociative thinking is a kind of emotional detachment from the position opened. So you don't care about the position, you don't care about money lost or won with this position. Whatever happens, you win or you lose, you don't care, you don't give a shit. That's the dissociative thinking. It's extremely important. This is extremely important. You must not care about your position. When you learn it, my friend, the whole financial world of Forex shares and bonds is yours. Trust me, the most important thing you have to learn in trading. That's it. The third thing you have to have a proven trading system. I mean it. The system you have tested on nano or micro account. Why on micro, you might ask? Well, micro is much better than a demo account because it's real money, and in this way you will learn the dissociative way of trading. On demo account there is no emotions at all, so you don't care. And if you get involved even $5 or $2 in your position, when you lose it, your feeling is different. So I absolutely recommend you to use nano or micro account where 1 pip is 10 cents and 1 pip is even 1 cent. At least you have to feel the market, you have to feel the position and to learn to dissociate, to detach from the position. So the system I'm going to show you is very simple. It consists of 2 moving averages and 1 indicator, but it's really working. Trust me, if you adopt this system to your needs, to the time frame you work, you will see the results are incredible. It consists of 2 moving averages, as I've shown. The first one is period 5 moving average with shift 3, smoothed, applied to high. The first one, the green one, is applied to high. So once again, period 5, shift 3. And the other one is the same story, but is applied to low. So period 5, shift 3, smoothed, applied to low. So we got 2 moving averages. Very simple, nothing complicated. The next part of this system is an indicator called CCI Adaptive Smoother, which looks like that. Let me show you. You will find this indicator on my webpage. You will find the link below. You can load. There's lots of indicators over there, but this one is, I highly recommend you. This indicator, it works nicely, and for this system is very, very good. So what the system is about? The system is about that as soon as those lines just depart and the yellow line starts rising, but rising in a proper way, the angle here has to be between 2 o'clock and midday. Then it's a signal for buying. Obviously, you can buy from here when they detach those two lines. When the yellow goes over the blue one, you might try to buy first one, and after, when it started rising, you buy the second one. But what's channel for? The channel is the most important thing in this system, because the channel will show you when to get into the market. Please observe what's happening here. As soon as the candle closes below the channel, you got the signal. But you look like this one. The candle closed below. You already got the signal on this channel. I mean, the price already is under the channel. I remind you, this is high and this is low of the price on 5-period moving average. But it's not a signal yet. As soon as you get the signal when the candle crosses below the channel, and here this angle already happened, and you got into the falling market, declining market, like here, this is your signal to get into the market. And the same story is earlier when, look, here the price started rising already. It detached from this, but only here the upper moving average was crossed above. So basically that should be the area somewhere when you get into the market, because this yellow line start rising and the angle is very steep. So in a flat angle, we don't know whether it will be a chopping market or consolidation area. So we wait till these lines, they stand steeper. So probably the channel was crossed, the line got steeper here, you should buy somewhere here or here. You don't get all this movement. Obviously, you can try anytime it crosses, but it doesn't work that way. You have to get this channel. Look, then I give you another example like here. Look like here. You got the cross over here, but you don't know what's going to happen. The line gets steeper here, but already is over. It's too late a little bit, so this one is not signal. But this one, you got signal once here, like this one. The line gets steeper. We got the downtrend from here, from this part, it says. So we have to look at this situation when the candle crosses below, and we can get all this. We keep all this part of the movement, but where we get out right here when the lines detach, the blue and the yellow lines detach, we get from here. So that should be our profit, about 50 pips. It's very safe system, my friend. It's very safe. So you can trade it also in the other way. You can trade it in this way, that here the first signal, the prices detaches here, the lines get detached. Already we got signal together. So it's, this one is simple. But like this one, the line has detached, but we haven't got signal yet. We got the signal over here, the first one, yeah? Once again here, look like, for example, there's also some fakes. It's not only you'll get 100% proper signals, but like this one, look, like this one over here, the line got detached, and the price crosses above. You put the stop loss under the last bottom and keep it till it rises, and you get out when you got the signal of rising. So you may also try to pyramid your position. What does it mean? So every time you got the signal like this one, over here, the lines got detached, you open a position here, but you don't open the full position here. Here the lines got detached somewhere, or here. You don't open full position. You open 1/3, 1/4 of the amount you can risk. And from here, as soon as it goes up, and you add up to the account over here when the market crosses above this channel of those two moving averages. When the market moves further, you move your stop loss up to here, and here you add up another position, and so on and so on. And if you manage, when you hit it the proper way, the market is yours. Here the same story. Look here. You open one position here, wherever it is. After it goes down, you add up to the position once, twice, the third time, the fourth time. Pyramiding is the best way to invest your money, but you have to start small. Don't open the position with 1/3 of your account, because, it's 3 transactions and you are gone. And very often happens 3 transactions in a row, losing transactions. It happened to me so many times, not 3, but 5 or 6 or even 10 transactions at my beginnings where I was losing money, but thanks to small positions I was dealing with, 2% of my account or 3%, I managed to stay alive. So once again, that's it for short. Find this indicator under this video. You'll find the link below, and get it from my webpage. Watch my other videos. Thanks for watching. I'll see you next time. Bye bye.